initial jobless claims will be the biggest one of the week. This is going to greatly affect the market, as it always does. And this comes out 1 hour before the market opens on Thursday. So aside from that, we don't really have much going on, as you can see. So we won't see anything happening on the economic side of things, economic calendar, but we do have earnings that can affect the market. So as we saw from Netflix, we had positive earnings report, and that really boosted the overall market. There are not many setups on the tech side of things that are looking good, but financials are still looking very strong, and I think there can be a few trades left from the financials. So heading into Monday and Tuesday, you can possibly still trade the momentum of the banks, whether it be buying the dip or whether it be trading the breakout to further profit from the bank's momentum. Now, we got Tesla reporting on Wednesday after the market closes. We also have IBM reporting on Wednesday after the market closes. Those two, in my opinion, are going to be two of the biggest earnings that are going to report that can affect the market. But anything else, I think there's smaller earnings where the market is likely going to wait for next week's big tech earnings. So next week, we're going to get a report from Microsoft. So Microsoft will be reporting on October 30th, and October 30th is going to fall on Wednesday. So next week on Wednesday, we have Microsoft, and then we have Apple also. Let's take a look at when Apple's reporting. Apple's reporting on the 31st, so that's going to be on Thursday of next week. Meta is reporting earnings on the 30th, along with Microsoft. Amazon is reporting earnings on the 31st, which is, I believe, Thursday. So it's going to report with Apple on that day. So I'm very excited for those big tech earnings reports, because Microsoft has been stagnant for some time here. It has not been able to see any upside here. We are still trading just at the 200 simple moving average line, which means they are still technically close to the uptrend. They are maintaining the uptrend, but the uptrend is greatly threatened with candles closing below the 200 SMA line. When a price closes below the 200 simple moving average line, that signifies that the stock is in a downtrend. So Microsoft is really flirting with that downtrend, even on the bigger time frame here. As we can see, it does not look the best. So earnings is going to really shape this up, and it's going to tell us if we are finally going to get a breakout above this downtrend with positive earnings, where we finally head back up towards historic all-time highs. Because if they do beat earnings and we finally get a catalyst for Microsoft, this stock has plenty of upside room to expand towards 465. Now, if earnings somehow goes bad and we break below 408.80, then this can send it all the way down to this gap fill here at 395, as well as a retest at the lower side of the support inside of this falling wedge formation. So it's going to be very interesting. Personally, I think bulls will end up getting a catalyst from earnings and finally move Microsoft higher. I'm not entirely sure just yet. So we do have a good amount of time to kind of decide on that, if we are going to close our position or not. So we'll see. This is Apple here. Apple is very close to its level of resistance at 237. And that's one of the reasons why I'm staying away from a lot of the tech stocks this week, because even if you look at AVGO as well, AVGO, this is Broadcom, another chip stock, and we can see it's also trading at a level of resistance. So the only thing that I really am off about this week is tech. Tech does not look good. Looking at tech, at all of them, even Nvda, it just seems like tech would need some strong momentum, especially from the chip side, to finally get that major up move, and it just doesn't look like tech may have it. They may very well have it, but we will have to see. We will have to see. For now, considering that we are close to levels of resistance, we are going to stay away from these particular stocks, and we're going to focus on other areas that are providing opportunity. Now, I do want to go back to the S&P 500 and analyze it, and we will go from there. All right, so here's the S&P 500 so far, team. As we can see, we are inside of this bullish channel. We have been going from resistance to support to resistance and then back to support, and now it looks like we are heading towards resistance. So even though it has been a slow grind, as we can see here, we have these slow grinds. Eventually, once we do test those levels of resistance, upper resistance, we do end up falling back down. And so far, we have room. It looks like the S&P 500 has room to continue to push this higher. Now, this is on the daily chart, and of course, the daily chart does look off, and this is what is going to attract a lot of short traders to come in. However, what the market will end up doing in most cases, especially during these specific times near historic all-time highs, is it's just going to end up squeezing those traders. So I do want to show you the weekly chart here to give you a better perspective on the S&P 500 and why we should be paying attention to the weekly chart for this upcoming week ahead. If we look at the S&P 500 here over the last 1, 2, 3, 4, 5, 6, 7, 8, over the last 8 years here, we have been inside of this bullish channel. We have been going from resistance to support, to resistance, back to support, and then again, further establishing support on that rising support trend line. And so far, what does it look like we are doing, team? We broke this downtrend here, right? We broke this downtrend. We went all the way back to historic all-time highs. We broke historic all-time highs, and we had a major consolidation around this area with a very, very nice corrective pullback. I believe that one was around 7 to 8% there, and we rebounded right back up. So the fact that we are back up all the way here, and bulls had a nice consolidation in the last 3 weeks there before finally breaking out and giving a follow-through confirmation this week, I'm going to look for more upside heading into this Monday and Tuesday of this week, anticipating that bulls are going to continue to advance higher from here. Now, I do want to note that the S&P 500 is finally getting above the 70% on the RSI. Now, the reason why, well, it's currently trading at 69.3, so it's not yet at or above 100, above 70%. And the reason why getting above 70% is so important is because once we do get above 70%, it triggers what is known as a melt-up operation. So we can see right here, it's very, very similar to that consolidation that we had. And you can see once they got above the 70%, we had a nice melt-up operation. And SPY kind of is giving me the same vibe here. We had a nice consolidation. And the fact that we had that consolidation for about 4 weeks and finally broke out and then closed this recent week above the breaking area, this to me is bullish, and I think bulls are going to advance as long as we're going to continue to see positive reports. Looking at the RSI here, I'll be paying attention for bulls to get above 70% to see if they are going to give those melt-up operations. So if we do see further positive reports heading into this week, I'm going to look for that 70% to take advantage of the melt-up operation towards the level of 590, okay? 590 on the S&P 500. Now, let's go take a look at the monthly time frame. As you all remember, we have been doing these meetings pretty much every week, and you guys know that we have been talking about this week by week, month by month by month, and we said when we got this candle here, we said this was going to get a liquidity to the upside. It was going to get a nice green upside. So far, we have been seeing just that, and not only that, we also saw more liquidity coming in on the following monthly candle for the month of September. And then heading into October, we also saw a little bit more liquidity to the downside where bulls came in, got the closing week of the current candle above the prior week of 574.31 peak, the closing, and closed at 586. So what that tells me is that bulls are stepping in. They're very strong. We are already in the melt-up operation within the monthly time frame, and that's why the dips continue to get bought. So what this tells me heading into the rest of this month is that I think bulls are going to continue to bring more green to this candle, pushing it towards 590, 591, and perhaps eventually get a retest of the top upper resistance line there, and from there pull back down. Analysts have been discussing that 620 to 625 level heading into the end of this year, and so far the setup is there. I just want to say the setup is there for them to do that. Now for QQQ, what we have is we have a breakout above this level of resistance, right? We got a breakout above that level of resistance. And so far, this is what I am seeing. I'm seeing a higher high there, followed by a higher low structure. And what bulls are trying to do pretty much is, let me duplicate this. Now bulls are stepping in to see if they can get that higher high there to retest that level of resistance, pretty much retest its historic all-time highs at 503 and pretty much get that upside going on the Nasdaq side of things with the rest of the market. If you notice, if we compare and contrast QQQ with the S&P 500, as well as DIA, which is the Dow Jones Industrials, these two have been making historic all-time highs. We can see the S&P 500 is trading at 586, already far above its historic all-time highs of 564 as well as 524, whereas QQQ is still trading below its historic all-time highs of 503 from the July market drop or market correction. Now, if we look at DIA there, DIA, just like the S&P 500, has been making historic all-time highs, and we did discuss the strength of this particular ETF in the recent weeks there for our team. The S&P 500 has been making historic all-time highs. DIA has been making historic all-time highs, but QQQ has been a lagger. And let's take a look at why this particular ETF or portfolio has been a lagger. So the Nasdaq represents non-financial, mostly technology stocks, okay? It consists of non-financial stocks that are technology stocks, okay? So mostly tech stocks that are non-financials. So stocks like Aapl, we can see Aapl, yes, Aapl is going back up, and that is good. Although it has been a lagger, it hasn't placed new historical all-time highs, it does look like they can do it. Everything is looking good for the bulls to try and do it. And that's what we need to see. We need to see buyers showing up on Microsoft, because if we look at Nvda here, Nvda just seems to be at a level of resistance, and it just may take a lot more strength to try and break that level of resistance, considering that this is the second test and that we need more liquidity to try and get above it. We are also very far away from the 20 EMA line, so it's really going to be key for some other tech movers to try and step in if we are going to see new historic all-time highs on the Nasdaq or QQQ. So one stock in particular, like I said, is going to be Microsoft. This one holds major weight of the XLK sector as well as QQQ. This is the XLK sector. So XLK is the technology sector of the S&P 500. We have Aapl, Nvda, Microsoft. Microsoft here was 21% of this weighting. And so far, we have seen a decrease of Aapl taking Microsoft shares, as well as Nvda taking Microsoft shares, being the second biggest weight of the technology sector. So we are going to have to see Microsoft stepping in. And I think investors are looking forward to this particular earnings for some sort of catalyst so that Microsoft can get its shares back. We'll be looking at Microsoft, but yeah, team, this is what I am looking at for QQQ. I do want to mention that despite such weaknesses, so far, QQQ is doing well. We are above the 20 EMA line. We have been consolidating well, and it really is just waiting for that big breakout candle so that they can advance. Maybe once they do break this level of resistance, perhaps this will lead to a short squeeze on QQQ, which is Nasdaq. I'm not sure how this is going to play out, but I did want to mention that bulls are trying to advance towards 503, and I believe any positive catalyst, any positive news that we get throughout this week as well as next week is going to send us towards that magnet level of 503.52, which is the historic all-time highs. Now, if you want a line, if you want a level to be like, you know what, now this is where I sell everything, this is where I de-risk, this is where I pretty much I go on defense. This is the level, okay, below 484.37. If QQQ somehow gets below 484.37, you are going to run for the door, okay, team? We are going to run for the door if we get below that level, because this level would tell us that bulls have lost their strength. Once we go below it, that's where things will really start to sell off. And from there, things are just going to sink. So just pay attention to that particular level, okay? This level is going to be key. And as long as bulls are going to maintain it, I think we're going to continue to advance higher. Now, I do want to show you QQQ on the weekly chart to give you a good perspective of how the bulls are looking on the bigger time frame. So we had this major market correction back in 2022. This was a bear market, okay? And ever since we broke out from the bear market and entered an uptrend, we have been inside of that uptrend, going from resistance to support, and so far, bulls are looking strong. They came in, they stepped in at support, they're above the 20 EMA line. And if I zoom in on the most recent price action, we have been consolidating very, very well, as you can see from those 3 weekly candles, each of them representing each week. And so far, it looks like bulls are stepping in, because if you notice, this candle here closed above the prior week candle. This candle here, despite getting a drop, closed above the prior week candle. This candle right here closed above the prior week candle. This is each week-to-week basis. Bulls are getting a higher close than when they open. Same with this candle here. Although it looks weak, bulls still did close above the prior week, which means that bulls are still in control, and 503 can be our target, but our main target can be anywhere above 525 and even 530 heading into the end of this year, if major tech earnings go well this in the upcoming week. Not this week, but next week. Well, we do have Tesla. Tesla is going to be key for Nasdaq, and then we have IBM as well. IBM always does good, but I am curious to see how that's going to play out. And then heading into next week, this is when we have Amazon and Apple reporting on Thursday, and then we have Meta and Microsoft reporting on Wednesday. All right, so now that we covered QQQ, I do want to go look at IWM. So team, you know we discussed IWM, and if you are not paying attention to the weekly watch list, you are not using our service right, okay? You are not taking advantage of our service if you are not watching this channel every single day before the market opens. So the weekly watch list channel, this is where we shared some very, very golden setups. You can take a look at IWM. We shared IWM potential bullish ascending triangle with a beautiful demand candle holding well above the 20 EMA line. Buying to open IWM January 17, 234 call at 550 or around that range. And do you know where so far? We are trading above the 224 resistance, and we're looking really, really good. Now, I did share something else. I shared for risky traders, for those that day trade, that have experienced day trading as well as short-term swing trading. I said buy to open IWM October 25th, 224 call at 1.70 premium range. Now let's go take a look at IWM for that contract if you did participate. October 25, and we looked at the 225 call. You can see the reason why we picked this up is because we anticipated that we would be breaking above this particular resistance level, in which we did, and advance towards 227. So let's take a look at, so this is when we shared IWM at this candle there, and this is where we have gone so far. So if you bought this contract, you did really, really well. This contract went from that price all the way to 416. So that would have been an amazing trade opportunity right there. And we do encourage you to really check out the weekly watch list. Make sure you are always up to date, and you choose the best setups that are good for you. Now, I'm going to be honest, there aren't a lot of stocks this week. I only have a few, and the reason why is because I want to react to data as we get data, and I want to trade that way heading into the upcoming weeks, because we are going into a very, very crazy time. So really, how I want to end the index analysis here is that I want you guys to expect the market to, if anything, have one more market melt up, and then expect a major, major crash to come in the short term, okay? I think this is a good or not a major crash, just some sort of pullback. Okay, we're going to react to the pullback, but I do want the team to make sure that you are de-risking a lot of your positions heading into the next 2 weeks, and that you start to wait on the sidelines and wait for the market to pull back to some levels where we want to react based on how bulls are going to step in, and then buy the dip again, and then continue to trade the upside more. Because if I look at the particular sectors here, I can tell you, team, there are not many sectors that I like that can continue to see more upside. So XLC, now XLC in particular, this is a sector that I am actually watching. The reason why I say that is because I am watching streaming stocks. Okay, so this particular sector is a communication services as well as a streaming. Okay, so it's the communications and streaming platforms. So the communication stocks such as Meta, Google, and then we got streaming platforms such as Netflix, Disney, and so forth. So Netflix beat earnings, and it is a bullish momentum trade for this week. It should continue to see more upside towards maybe 570s and 580. So for those other traders, experienced traders that do want to trade this particular stock, you can go ahead and trade it. But I would not recommend it for obviously for our newer traders, but it is a good trade for experienced traders to try and take advantage of this bullish momentum higher. So Disney also looks really good here. I am liking Disney on the streaming side of things. This one is creating a potential base rally and could really see more upside towards 102. Rody has been looking at Disney, and I have been paying attention as well. But what I really waited for was a candle like this, and so far we got that candle. So I think we have the green light to go ahead and buy a long-term leap option on Disney here, in anticipation of further upside heading into earnings, and then hopefully positive earnings report. If a healthy pullback is expected, should we take the hit on Microsoft? Yes, we will, 100%, Alex. If that ends up happening this week, we are going to indeed take our loss on Microsoft and walk away. But I think so far we are looking good, and I think we do have a good exposure to a stock that does have a good low risk for a potential high reward, considering how beat up the stock is and how stagnant it has been. So we'll come back to Microsoft because the 2K cash account team is in it. That is my priority, and I am going to adjust it for the team, and I will keep the team updated. But so far, Disney looks good, Netflix looks good for further upside, and as well as I think Rainbond had Roku. I'm going to save that for Rainbond here. And now let's go to other sectors. So the real estate sector, it does look like bulls do have the momentum to continue to push higher, but it's not my cup of tea at these levels, and I don't really trade real estate stocks much. I did study it over the last two major rallies, and I did pay attention to the particular stocks like PLD, AMD, Equix, and matter of fact, I think no, sorry, it was ADP. Yeah, ADP is the one that has been. But yeah, we will be. I have been studying these real estate stocks, but I need to see more. I need to learn more from the real estate before I start sending out alerts for the team. Now let's take a look at utilities. Utilities has been doing really well inside of this bullish channel, and bulls continue to advance higher. Obviously, I think this particular sector can continue to see more upside. Now, I have been paying attention to XLV here, and the reason why is because when you do see a rotation outflow going from tech, and what usually happens is it ends up going into the healthcare sector. So if tech does end up pulling back, this is a particular sector that I am anticipating will get the rotation inflow. For now, I am going to continue to watch it. I'm not going to make any trades on it just yet for this particular sector. Now, there are many stocks I'm looking at. I'm looking at J&J, ABBV, TMO, AMGN. There are some really great stocks. Regen as well. Regen is very, very oversold. So I am looking at a lot of these stocks at these levels, and I'm just waiting for that rotation inflow before we act. XLB, which is the material sector. This one also is, you can see it's been grinding higher. It's in an uptrending market and will continue to go higher from here. Pretty much I'm seeing strength in other sectors that are not tech. So uh, I'm seeing strength in utilities, in materials, and I just don't know how to feel about that. And I think this is one of those times where, yes, the market can get another melt up, but after that melt up, I think things are going to take a pullback, and we should be prepared for that. So after one more potential melt up here, I'm going to take things very easy. So if we do get another melt up from the market, I'm going to close out some of my swing trade positions, because what I like to do is, and I hope this also benefits others here as well. You have to adapt with the way the market moves. Okay, so in the beginning, as the market starts to gain momentum on an uptrend, this is when you have peak positions. Okay, this is when you are still loading positions, and depending on whether you're aggressive or whether you're conservative, you're adding positions. This is the time where you are adding positions, and then after that, as the market starts to advance higher, this is when you are going to slowly decrease your positions and de-risk your positions by selling the very great winners, and pretty much rotating from sector to sector to sector, just like we have been doing. We went from energy, and then from energy we went to financials, then from financials we went to tech, and after we went to tech, we went to the streaming platforms. As you all remember, we made some amazing profits on Meta. I kept telling the team that Meta was going to have a meteoric rally. I said meteoric rally because it matches with Meta, and you can see, team, we went from 519, which is where we picked up the call, all the way towards 602. Very, very nice. And as we can see here, a lot of these stocks don't really look like they have fuel to go higher. I'm pretty sure they can still advance higher. If they get, like, let's say one nice green day, one nice positive day, they can just create some big green candles that can just create the setup to further see more upside. Until then, until that happens, I'm going to take it easy, and I'm going to step away from these particular tech stocks, and I'm going to focus on other sectors of the economy, as well as other areas of the market. So I do want to share that for tech, there's one stock that I like. And if you notice, this stock is from XLY sector, and XLY is the consumer discretionaries, and this one is looking, out of all of the sectors, this is looking the most healthiest. This is looking like it has a lot of room, and it can advance here, as we can see here. So it does look good. Bulls had that nice expansion, and after that expansion, they came down to the 20 EMA line on the contraction for that higher low, and so far we held really well. We are above the 20 EMA line, and it does look like bulls can potentially step in heading into this week to retest the level of resistance at 202, and then advance higher for another base rally there. So looking at Amazon, I think Amazon is one, because let's go back to XLY. We can see Amazon's a major weight. It's a 22% of this particular sector, and I think Amazon can see more, or can bring in more market share for that particular sector, and it's looking really good here. So I will be watching Amazon here, team. The setup looks really good. Bulls have a nice rally. They got that pullback, and so far this particular level of resistance that I am watching, that resistance is its historic all-time highs. So this is the historic all-time highs from 4 years ago, back in 2021. Amazon peaked at 187, and so far we closed this week's candle just above that. So it is possible that this is a nice base rally, and it's getting it's a nice rally base, and it's basically preparing to do another rally towards its historic all-time highs at 201 so that it can see more upside from here. Amazon looks really good, and I think this is a good one to swing trade. I believe Rain Bond is holding a trade on that one, and this is a trade that I am looking forward to buying right on Monday's open and pretty much holding. So Rain Bonds got Amazon March 21st, 225 call at 465. I'm going to buy that call on Monday's open, and I'm going to hold it for this momentum here to see if they're going to break this level of resistance and try to advance towards 195 and maybe 201 before earnings. So Microsoft, Amazon does look good here. This is about the only tech stock that I am watching. We also mentioned another bullish momentum trade, and that's Amazon. That's Netflix. So Netflix had a major breakout, and so far we are in a squeeze operation. So this squeeze operation could then get above 70% melt up, and it could send the stock towards the 800s possibly. This is one of the stocks that can basically see more upside heading into this week. So for those of you that like to trade momentum, Netflix could be a good one along with Amazon. I do want to clarify that this particular trade here for Netflix, this is known as a post earnings bullish momentum trade. Okay, and the way that I trade this, this is usually I would buy anywhere between a monthly call or a 2 weeks out expiration. With a 50% stop loss. Once it hits my stop loss at 50%, I take the loss, I walk away, but usually the opportunities can provide anywhere between 100 to 200 to 300% profit, and we have seen that happen over and over and over, as we have discussed before. Another bullish momentum trade, post-earnings trade, is ISRG. This one has been inside of this bullish channel, as we can see, and so far bulls have a breakout above that very key resistance level of 494, and they are advancing towards the upper resistance line of this bullish channel around the 550s. So I'm expecting ISRG to head towards 550s for another bullish momentum trade. We have a lot of fuel there, as we can see. So that's two bullish momentum trades. Although they're very expensive, the contracts are very expensive for average traders. I did want to mention it for our bigger accounts so that they can take advantage of this. Now, team, I am also looking at cost. I'm not entirely sure yet, but I did want to mention this for the team, because what cost seems to be doing is cost has been inside of this bullish channel, going from support to resistance to support to resistance to support, and then so far it's been consolidating really well, just hanging on above the 20 EMA line. And heading into this week, if I see that bulls are stepping in with some sort of nice demand candle reaction, regaining the 20 EMA line, I am going to take a bullish trade for the long term towards the 1,000 level. So the way that I would want to trade this particular contract, and this could be a good contract to farm into earnings, okay, heading into earnings. So what I call farming contracts is when you buy them cheap before the breakout happens, and you sell them either before the breakout, before earnings, or after earnings. So the reason why I call it farming is because you're essentially buying it low and you're going to sell it to the earnings traders without having to take the risk into earnings. So maybe you will sell it just before earnings, just before they report earnings on December, and you secure your profits. But I do say this can be a good long-term position. You can pick up cost June 20, 2025, 1,000 call. Okay, team? Cost June 20, 2025, 1,000 call. This can be a good trade for those of you with bigger accounts, so that you can pretty much you can take advantage of this potential rebound from this bullish channel support towards the resistance line. Let's move on to Chinese stocks. Now, I know many of you have been waiting for us to talk about Chinese stocks. Chinese stocks are exactly where we want them, okay? So far, they're exactly where we want them. They have come down a great amount. They're very, very cheap. And now it's all about paying attention to the Chinese economy, seeing what kind of updates they're going to get, how the government is further trying to rescue its economy, as well as a lot of the issues that they are having, such as deflation, such as the real estate crisis, and let's see how the government is going to rescue this. Because the way that I see the Chinese market, team, the way that I see the Chinese economy, to me is very, very similar to how we were in 2009. It just seems like the Chinese market is experiencing a similar outcome, a similar event, and now the Chinese government is really trying to get involved, and they're rescuing a lot of these very badly hit. They're rescuing the real estate with stimulus. They're rescuing the overall market as well, and so yeah. Long story short, team, I will be paying attention to Chinese stocks from here. I will be paying attention to what kind of news they get, what the Chinese government does, because it's going to greatly, greatly affect the Chinese stocks from here. We have been coming down for a long time. Chinese stocks, unlike U.S. listed stocks, unlike U.S. stocks and even other global stocks, it's been going down for the last 5 years when the overall market has been going higher. And this is because of everything that they have been experiencing within their economy. And this spike that we are seeing just recently that ended up breaking this particular downtrend on Baidu stock, this was from that stimulus. Okay, this is the reaction from that. So going forward, I really want our team, those of you that have good understanding on Chinese stocks, I need you to share with our team on Discord so that we can stay up to date and trade the momentum from here. We usually don't just trade the momentums right away. However, when we do see reaction for the momentum, we do trade it from there, because this can be the start. This can be the starting uptrend, and this could lead it all the way up to 155. And before you know it, maybe in 4 years, they'll go as far as the 300s again on Chinese stocks. So this particular stock, this is internet search services, just like Google. So this Baidu stock is just like Google. So pay attention to Chinese stocks. I'm going to continue to observe it, and we will see from there. Okay, team. Now, this particular contract that I'm looking at for Baidu, I'm going to buy Baidu June 20, 2025, 120 call. So the strike that I'm targeting is this is after breaking this particular resistance level that we have at 114. Once we break that level of resistance, this will put the stock in a major uptrend, and that can get us closer to our target of the 120 call. We do have plenty of time, and this is a good stock. Okay, team. So Baidu, I will continue to watch Baidu. Make sure you are watching this particular contract, Baidu June 20, 2025, 120 call. I believe it is currently trading at, let's see what it's trading at. It's trading at 620, and I'm pretty sure you can get it for cheaper in the upcoming weeks there. Just make sure you pay attention to it and understand that you don't exactly have to catch the absolute bottom on this. You can buy it. You can be down a little bit, knowing that the opportunity can be great. Once we do see that, it can be well worth it. Once we do see that movement back up. So yeah, I did want to bring some Chinese stocks to your awareness as well here, team. I'll continue to watch them. I wanted to just show you Baidu for now. There are many other Chinese stocks that I am watching. JD is another one. JD has not come down as much. PDD is another one. PDD has not come down as much. BABA is another one. This also has not come down as much. But I will be paying attention to them from these levels, because I think this is so far a good opportunity for us to be watching. Okay. Let's take a look at FXI. So FXI is the main ETF. Okay, this is the iShares China Large Cap ETF. This tracks their large cap, and we can see that we can see that they have gotten a good significant pullback. Any further pullback from here, I think they're going to be amazing opportunities for the long term. Remember, not the short term, okay? We will not buy short term expirations on this. Our goal is to buy very long term contracts and invest into the future for these moves at these levels. All right, team. I think that's about it for me. I don't really have much else to share. Now, I do want to just summarize really quick, okay? Just to summarize, we will be moving away from a lot of the tech stocks. We will be moving away from a lot of the chip stocks, and instead, we are going to focus on the small cap. And while we focus on opportunities for the long term on small caps, we are going to expect the overall market to have some sort of correction if we do get another melt up operation. Okay, so we are expecting the market to continue to push higher from here, because this is what it's looking like to us. As we can see here, the market is really on a week-to-week basis. We got a nice consolidation there. We had a breakdown. The breakdown was engulfed by a bullish demand candle, and from there, bulls consolidated for 4 weeks, and now we are stepping in, and it looks like we are continuing this move higher. So far, if it looks like a duck and moves like a duck, it's a duck. And yeah, the market is in an uptrend, and we expect it to continue to advance until further notice. But I do want you to note that once we do get that big market movement, I want the team to de-risk a lot of their positions, close a lot of their positions for profit, so that you can be ready to buy back in much cheaper when the opportunity does present. Okay, this is the E-mini S&P 500 index futures. It's the price of the S&P 500, but for the futures market. Okay, so this goes on 24/7. Well, not it goes on 24/5. It goes weekends. Weekends are closed, but aside from that, it's available 23 hours of the day and can be traded. And so far, if we look at the S&P 500 futures, this is what we are seeing. We are seeing that failed breakdown there, just unable to get confirmation to the downside, with bulls really stepping in. So heading into this week, this is the resistance level that I am looking for bulls to get that breakout above this level of resistance and continue this uptrend heading into this week. So far, so good, team. Do you have a good understanding on how to trade this week? So again, how will I be trading the S&P 500? The way that I'm going to trade SPY is I'm going to look for potential calls, for good opportunities, possibly for potential calls once we break this level of resistance. So if the S&P 500 breaks 585.26 right at the opening session tomorrow, I'm going to trade the upside on that breakout, okay? And the reason why is because, again, the market is in an uptrend, and we're going to continue to trade with the uptrend of that market. Now, if we do break this structure here, this downtrending structure, then I am going to share with our team in chat room to pretty much be on the lookout, because the market has changed and so forth. But for now, so far so good. I think bulls have the benefit of the doubt.